Right, today's top picks on Breakingviews. The Bank of England should consider its own actions before blaming others. And fear-driven markets forget the central bank's collective mission is to keep order. So why be so surprised? Let's talk about these stories. Chris Hughes is with us. Let's start with the Bank of England. Can't blame Europe for its monetary U-turn. This is on the back, of course, of a George Osborne speech last night. Latest trade numbers show that trade with non-EU has been hit very hard as well. Another reason we can't blame everything on Europe.
Yeah, look, the UK is in a very tricky position. The economy is sort of bumping along, and the banking system is still really sort of struggling to give the economy a leg up. And now, after months of resistance, we're seeing the Bank of England actually decide that, after all, extra measures are necessary. And, you know, it's presented, as you say, it's presented as, oh, well, look, we've got this potential storm coming in from Europe, so we need to shore up the banking system. But I mean, the reality is that the UK is it has this dilemma. On the one hand, it wants to strengthen, it basically wants to strengthen regulation, impose higher capital requirements, and do all kinds of things to toughen up the system, which actually make it harder for banks to lend. And on the other hand, it wants more lending. So actually, what you're seeing in this policy action is actually an attempt to alleviate the side effects of that banking reform that's actually constraining lending. I mean, that's really what's going on. I mean, that's not a very...
Are they doing the right thing, though? Is Osborne doing the right thing? Is the bank doing the right thing?
They are doing the right thing. Let's be clear. You know, what we're not saying here, oh, they shouldn't be introducing reforms to strengthen the banking system just because they may impose some constraint on lending. I mean, this kind of approach where actually, you know, you're going in one direction over here and one direction over there, and then you're trying to bridge the contradictions is actually about the only way to do it. And you know, this combination of loans which are sort of dependent on putting the money into the UK economy and more liquidity, you know, all good. We haven't seen the details yet, so I have to say, frankly, it's quite hard to say it's going to work. But the idea is right. But I mean, let's not pretend that it's all about Europe. It's because this problem the UK's got is just so contradictory.
Okay. You know. All right. So that's the Bank of England. And of course, this was part of this bigger story that Reuters broke yesterday, that central banks are ready to act in the event of panic, you know, on the back of these Greek elections. Now, your point, Edward Haddas's point, is why are we so surprised at that?
Yeah, and look, I think it's a good point because, you know, today, if you look at the markets...
sorry to interrupt, is it a good point given the lack of coordination we've seen over the past 6 to 12 months?
Well, look, whenever we have these very tricky moments, I mean, since Lehman, you know, we've had you know, one or two moments where things have been pretty dicey out there, and suddenly, bang, you get this announcement, you know, from, you know, 3 or 4, you know, big central banks of coordinated, you know, repo operations, liquidity support, and the markets go, phew, what a relief, you know. And it's what's surprising in a way is that the markets, you know, have seen it as such a big deal that actually central banks might be preparing. What else are central banks supposed to do? This is their job, to be on hand to provide support in difficult situations. Now, of course, you know, when Lehman happened, it took.
I think there's just too much skepticism.
It took a lot to push.
Yeah, I think there's too much skepticism. You know, it's finance ministers' jobs to sort these problems out. We have had meeting after meeting after meeting of Eurogroup ministers, Eurozone finance ministers over the past 12 to 18 months. There isn't a great deal of faith in these, in them being able to get their acts.
Well, let's differentiate the finance ministers from the central bankers here. I mean, the point is that repeatedly the central bankers have shown that the markets can only push them so far before they effectively cave into market pressure and give the markets what they want in terms of, you know, the liquidity support and putting in place the mechanisms to prevent total collapse of the system. We've seen it time and again. Now, look, you may say that that kind of approach stores up trouble for later, either just by flooding the system with too much money or by introducing moral hazard, because ultimately you know that they're always going to be there. But in the short term, the reality is that they are not going to. They're going to do all they can to prevent a total collapse.
Okay, we shall see. Yeah. Chris, thanks a lot for that. The US Breakingviews show comes on every day, 12:30 Eastern, 17:30 BST. That's live. Of course, it's on demand. I'm Axel Threlfall. This is Reuters.